S&P flat, really where the action was today was in the NASDAQ. And the question really we have to be asking ourselves, is that going to continue? Are we going to continue to see action in the NASDAQ be able to get over some of these levels that we've been fighting with for some time? And if so, who's really going to lead us? And I think we're seeing some of those leaders become really clear. And I think that's something we should certainly focus on. For one, I, for one, think that this level right here from this July 11th has just continually been an issue for us. And we can just see it's marked off right there. That is that negative CPI month over month reading. And we could see the retest right in there and how we were just unable to get over that. The question really becomes, what's going to be the driver there? Why is this happening? Why are we just seeing the market just completely sell bonds left and right? They are just dumping bonds. We're going to talk a little bit about why that's actually good for equities despite the equity risk premium. We also need to discuss what's going on with gold. A little bit of a reversal today. Is that something that's going to continue or not? So let's just jump right into it. Now, we had mixed reviews overnight where we had China come out and cut rates. And of course, we should probably talk about that a little bit. But here's that close, that Sunday 6 p.m. close. And then you can kind of see exactly where we were at 10:22. So here we go with that close right here, right? And then you can see it right there. And then boom, up and over. And then we just kind of go from there. So there's Sunday. And then there is where we're at right into Friday, okay? And then where'd we go? Right to that level. Hit it and quit it. Tried to reject and then up from there. What's interesting about this particular level is if you zoom out to a 15-minute chart, just drop where that low is and you can see that level of resistance right in here and how it was resistance before. And I think it's important to note this was our first real test of this area, this 58.65, let's call it, right in there, and we held. But if we look here, are we really doing anything? Is anything really changing? Not really. You're flipping this resistance. This was your first real test of it, and you held. But you're in this trading range, and you've really been in this trading range for some time, I would say almost 3 weeks at this point. So then the question becomes, what's really going to get us out of this? How are we going to get out of this kind of range? Are we going to be able to get out of this kind of range? Would even be a better way to say it. And I think the answer is yes, but I think it's going to take some time. You know, if you take a look at some of the XLK names, for example, they look pretty good, but are they going to be the ones that are going to lead us out? Now, the XLK names can always change again, meaning Nvidia could take the place of Apple, but are they going to be the leaders? I'm not so sure that's the case. If you take a look here at XLC, you saw that we hit all-time highs and then pulled back. Take a look at this on the weekly, and you can see that level right here. We hit an all-time high there on the weekly. So what's really going to be the driving force? If we go and take a look at IGV, again, we have that high, all-time high, and then the pullback with some interest today. But if we start looking at the oracles of the world on a weekly chart and dive into them on a daily chart, do we really see any leadership? And the answer is no, we're not really seeing that. Now, we have about 37% of the S&P that will be coming out with earnings. But the question is, where's the real leadership? So then we start looking at the financial names, and they have no follow-through whatsoever. So where are the leaders, and where is that coming from? And I think this is really important. Now, if we sit here and take a look at the main sector, so I usually put 20 in, but I'm putting 21 in for a reason. And you'll see SMH in here. Now, here's XLK, the Qs, and this is the commodity index, IGV, cloud names, the SOX. So the difference between SMH and the SOX, the major difference between that is SMH carries 2x the weight of Nvidia. And then you have energy here, and then we have the industrials. So we can see that we've had a pretty decent day on what's going on there. One of the easiest ways to kind of look at this with the SPY is drop the SPY in the middle of this and then say, okay, what names are above the SPY, the S&P 500, and what names are below? And they're the ones that are outperforming, and these are the ones that are underperforming. So looking at the outperformance, we have XLK, SMH, and the Qs, commodities, IGV. Cloud. Now, we all know Nvidia had a good day, and we'll get to that, but there's some other names out there that are starting to act up, and I think that this is where people are certainly dropping the ball and not starting to look for new names. So like, here's an example of MSI today, and no one's really looking at this, and it's just been an absolute monster, as you can see. You know, it's just no quarter given whatsoever, but you're having names like this rally today. You're having names that are in the XLK that people are not used to. Adobe tried to find a bid today. Annette, which had zero volume, they tried to find a bid today. AMD even rallied today, which is kind of interesting considering all things, but it's trying to hold in here. Now, the big dog that led the way is Nvidia. And the issue here is it hits all-time highs. is that people keep talking about it being too high, it's too expensive. I have, just disclosure, I have a very large position in Nvidia, and I have calls going out from November, December to March. If you've been following these videos for some time, you'd be aware of that, and if you're in the community, you already know that. But if I take this all off for a second, we just look at this bar. The open was the low, and the high was the close. Now, TradingView has this really cool feature, and it's going to make my life super easy tonight. And what it is it just says all the candlestick patterns. It says all patterns, right? And you can go find it for yourself. And then if you don't want any, you just click off the ones that you do not want, and then it will just very easily get rid of them, and then you can focus on the ones that you're looking for. But the one that I'm looking for in particular begins with an M, and you can see it very, very clearly. But I'm not going to sit here and drag them out. We're just going to clean these off and then go from a couple more off, and let's get into it. Perfect. So what you're going to see here is this particular pattern right here, which is called our Marbuzu white. And it's a candlestick that does not have a shadow, extends from the candle body, open and close. Japanese for close crop or close out. Okay, some people call it bald or shaven head candle, whatever. The bottom line is when you see these, you want to pay attention to them because they are not common. As a matter of fact, if you went through the chart and you looked at all the times that you've seen these, which you probably have only seen 1, 2, 3, 4, 5 of them in the past let's just call it year and a half. Every single time you've seen this, you've gone higher. So here you are, it's ripped, right? Over and over and over again. And here you are at the top of the chart. To think that you're not going to push here, and I am a pattern trader, so whether or not you are, that's on you. But I am, and I'm going to point it out. It's very important to me that you're at the top of a chart and you're doing that. It also matters where the placement is, and you've been really wrestling with this area for some time. Now, we talked about this at nauseum about the call wall and what's going on there. We walked through it a little bit on Saturday, and I know I went over it on Sunday with the guys for sure. So guys in the general sense, but you want to watch these call walls. I'm going to show you where you can see them. So before coming in today, and the one that we saw on Friday had a huge wall right here, what we refer to as a call wall. And that makes it really very hard for them to get through that level. And so we saw that 140 on Friday, and that's why the stock was unable to go anywhere. When we came into this morning, and this is from Sunday, but when we came in this morning, the 25th, the whole wall was at 150 level. Well, this means that you really don't have anything that you need to worry about. Of course, you could always have other things to worry about, but from an option standpoint, can this flip? 100% it can flip. Of course it can. But the bottom line is, at the end of the day, this is going to present an opportunity because now we know where to look. Now we know where to pay attention to this. And right now that wall is at 150. Does that mean 145? I don't have to worry about that? No, you still have to watch that. But there's a really very easy way to see where you're going to wind up when you do these breakouts. And I'm going to walk you through this, and then I want to walk you through the valuations and where you're at, because a lot of people are what I will refer to very kindly clueless. Now, based upon this breakout and this move and where you're at right now, I just want to show you something from today. So today's move gives us a 144.22 target as a possibility. And you can't make this up. You're at 144.26.
Order partially filled.
Now, what's important about this, oh, it looks like one of my orders went off. I'm not going to have time to edit that. What you're getting at right here, and what I'm getting at is, you can see the timestamp on this. You can see where it's at, right? I want to show you how I got this so that you can do this. Okay, it's really simple. And do I know that we're getting there? No, it's a target. It's a possibility, right? But what this is showing is it's actually charting human behavior. And it's very, very simple to do. All you need to do is go to fib level. You take the previous high of the day, of that day, and you go to the previous low with fib levels. And what you'll see is it's going to give you this level. I'm not going to get to the penny because of it. And look where it put you. And then you look at where you're at post right now. And you're sitting right at that fib level, right? It's chart human behavior. And this is the area where it can either push, and if it does, it can go a lot higher. This is why fib levels are so important, because once you then you're setting up for the next level that's going on out there. 148 would be the next target on that. And that's where you would come in tomorrow and say, okay, if we're opening up at that 148, that takes me to the next fib. And then we see how the day sets up, and then you would just set fibs on that day. You could go out there further and look at weekly charts, but if you're just intraday trading, this is a really good way to get as I refer to it, back of the envelope way of looking at it. And I think that's really important because a lot of people are looking at this stuff and not understanding why it's good that they're selling bonds. They're not understanding this stuff, and they're not understanding the valuation of Nvidia. So I want to start there, and then we're going to get into some of these other points. And I want to say something. I really appreciate you guys sharing. It shows up when you guys share. I purposely do not run ads. I get asked all the time to run ads on this, and I'm going to continue to not do that as long as you guys share it, like, and comment, because that affects me and helps me combat the algorithm. My goal is to just present data. You guys do what you want with it, but I want to get it in front of as many people as possible. That way they can make better informed decisions and educate themselves. I can't do that without you sharing, commenting, and subscribing to the channel. It just isn't going to work unless I'm willing to run ads in the middle of this, which I really do not want to do. So I appreciate your support and look at it as a value exchange. It would mean a lot to me. Thanks. All right. What are you looking at? So you're looking at Goldman and you're looking at Nvidia and you're looking at how they view the world. Now, there's this new trend in research. And what they do is they give you a bull and a bear and a base case. And they do this so that they can cover their butts, for lack of a better term. But the way that they're set up right now, and as of last quarter, and this is from last quarter, we have not seen this quarter yet, their bet number one is bull case number 2 is 236. Their base case is 135. That's where they're at right now. So this is really important because you can see where the earnings are, you can see where the revenues are. So when they come out this quarter, you can look at this and then utilize this to make a more informed decision. The purpose that I'm getting at here is if you look at the people online, anyone that's on Twitter or YouTube, it's overvalued, it's this, it's that. I'm going to show you how it's not in a moment, but I think it's more important to just hammer this point home. Who are you listening to when they're telling you it's overvalued? Do they have your kind of portfolio? Do they have the kind of success that you want? Forget, I'm not talking about me, I'm just talking about in general. If you're listening to somebody and they're not where you want to be, why are you listening to them? Okay, just think about that for a second. So when Goldman comes out and says, hey, this is where you could be in 12 to 18 months, we're probably in this range, okay, then maybe you want to listen or just try to understand how they're getting there. Because even if they're wrong, at least you'll understand where they're wrong, and then you could take the other side of the trade. Just food for thought. But look at some of these metrics. So when we were out here in about August, you could see down here that Nvidia is trading at a 46 premium to our coverage of the entire group, which is below its 3-year average. It usually trades at a premium of 151. NTM is next 12 months PE relative to all the stocks that are in their coverage that are tech. Now, as this matures, you're not going to stay here, right? You're not going to have this huge valuation or coverage over that because it's just not realistic for a company that's this big to keep getting to the same size. It's just not. So you're going to expect a discount. But would you expect, and when you look at this, and this is the point that I really want to hammer home, if you came across here and said, not only are you not at the average, but you are trading at the historical lowest level over a 3-year median average that you have over the past 8 years, right? That's roughly where you are right now because of what they're earning. So if you're betting that this is going down for some reason, then you're betting that they're going to miss earnings, that their earnings are going to come down. That's the only thing that you could be betting on here in order to think that this name is going to drop. There's no other, I'm open to any comments on that. But what I'm getting at, besides the comments that actually make sense. So think about your comment and think if it makes sense before you make it. But you see where I'm going with this? You're at a level where they're like, oh no, you're back to that Gen 20th level. Yeah, you're right around there. Now you're a little higher right now, right? But you're not even back to the medians yet. Now, when you're trading at 42 times or 1% below its 3-year median, this is your average level on where we're trading. So when people are telling you that the stock's trading too high or it's too expensive, you're at your 3-year median. I think this is really important for people to get that. And I'm not saying that every quarter is going to be rosy and everything's always going to be great. It's never going to go down. Of course it is. But you're trading at a pretty average valuation for where this stock sits. So to look at this and say it's too expensive or it can't go higher, I think that people are a little bit delusional about what's going on here, and I think that they need to view it that way. Now, no one ever knows what's going to happen, but you cannot say historically that this stock is expensive. Not unless you think that those earnings are not really there, not unless you think that they're going to miss. Then, of course, you could think that. But if you believe that the earnings are there and you believe it's going to be a grower, you cannot say it's expensive. Now, this is where it gets interesting. So I've been saying this for some time, and I'm not doing this to toot my own horn, but I want you to understand how big I think this is. And if you've been following these, you know that. But I want to just hammer it out for those that are new. So friendly reminder, Nvidia will be bigger than Apple. I've been saying it forever. I was pointing at these two charts and how they look the same. And then I said this in May 24th, 2023, Nvidia will surpass Apple. It's just a matter of time. Caught a bunch of flack for it. And the reason for this is people don't truly understand why Nvidia is so important And why Nvidia is going to put itself in this position? Well, quite frankly, it's going to be as dominant as a Microsoft. It will have a moat that no one else will have. And we can get into it in another video where we talk about the software behind it and everything else. But this is where you're at today, and these are the headlines that are going to hit tonight. And everyone's going to come into their broker, and everyone's going to talk about it tonight with their family, and everyone's going to want to get involved. And they're all going to try to play this before earnings. So please understand how this is playing out, where we're heading with it. If you look at some of the data that's out there and what some of the analysts are already doing, they're trying to get ahead of the quarter. They're already trying to get ahead of it. Analysts have two ways to get ahead of it. They can either take a shot, which a couple of these guys are doing, or they wait for the earnings to come out like Goldman will do and then upgrade it. What they're doing here is these guys are taking the shot. So Bank of America is coming out and saying 165 to 190. This is a once in a lifetime opportunity, a once in a generational move. I do think that you're looking at something like you're going to be looking at Microsoft 20 years from now or whatever company you want to equate it to, and you will be looking at something like a Nvidia. It will still be there. I do believe that. I do believe they will have competition eventually. I do believe someone comes out with another chip that will be faster someday. It's just the game. But for right now, it's not. And you're seeing Cifra come out with a 160 target price. I also think it's really important to start reading between the lines on what's going on here. When you start looking at Jensen coming out and saying insane demand for AI chips, which are used in data center by big tech. Recent and positive news from the company's industry partners boosted AI stocks across the board, Nvidia, Micron, Taiwan Semi. What happened here is we kind of a little bamboozled by the ASML news, and I think that kind of took the air out of it. But when people are starting to do what we refer to as channel checks, it's really an ASML problem, and the ASML problem is actually because of Samsung. And that's a completely different issue for a completely different time. Where I'm going with this is, can the market lift? Yeah, I would start looking at the names that are associated with Nvidia. And if you haven't been, I would be focused on names like AVGO. Another one that I think, and I'm going to get a little micro here before we go back to the macro, how many people are going to stay short SMCI into this quarter? So how many people are going to hold, right? I mean, Hindenburg did exceptionally well with this. On the 29th, they're coming out with earnings. Are people actually going to stay short this into earnings? I'd love to hear your comments. I can tell you right now, if I was short, there's no way in the world. Because they could let's just say they say something on purpose just to squeeze. And that's just it with these squeezes, guys. I'm going to show you one. Like, you never want to be the last person out of the squeeze. Right? Everyone here says, oh, it's going to zero, and then it's 50% higher, right? IEP, and completely different companies, but that's the process, and that's what you have to understand. So we've identified a couple things. We've identified who's leading, which is clearly Nvidia. We've identified why. We've identified that it's not expensive. Right? Whether or not you think it is, you're always welcome to comment. I always like your comments. It does help me know where people are at, right? So we know that it's not expensive. We're seeing other areas lead. For example, you're watching this uranium trade continue to lift. So we have other pockets of money that are flowing. Okay. What else is driving this market? Because the bond market's selling off. And if the bond market's selling off, equities are supposed to go down, right? It doesn't work that way. And the equity risk premium has flipped, where good news is good news and bad news is bad news. And I'm going to explain. But before we go any further, just one more thing to chew on here. Here's Nvidia and here's gross profit. And I just want to show you that if you take 24 gross profit, forget here. Just take 24 gross profit and realize that it encompassed 21, 22, and 23. And then realize to even take 24 gross profit, you would literally have to take everything from 21 to 15 on to even get close to what they did. Just think about that the next time someone tells you that it's expensive. Now, we've been talking about this chart for some time. And for those that are new, welcome. And we're going to go over it again very, very quickly. Current is in green. Blue is when they cut rates for the first time, and you're zeroed, and that we don't go into recession, and that n equals 5. And then when they cut rates and we do go into a recession, n equals 3, okay? And then you'll note that you have a demarcation line right there very closely, and you can see that, right? What happens at that 2-month mark is very, very clear, isn't it? So at 2 months, this makes a decision. It has its moment in the sun where it will say, yes, we're not going into a recession and we're going higher, or no, we're going into recession and we're going lower. Okay. Once you see that, you can go from there and then go, okay, that's where we're at. That's why this area right in here is so important. Let's change the color of that you can see that. Make that a box. There you go. Boom. Well, we didn't change the color. Hold on. Stay with me. I can do things. There it is. Boom. So all of a sudden, here you are 2 months, and you can see that this is where it starts making a decision. right? That's why the economic data is so important. That's why you're seeing these huge moves in economic data right now. Why wouldn't you need to cut rates? And why would the bond market be rallying? Because we're seeing what? We're seeing increased productivity. And as we're seeing this increased productivity, and guys, you can be as the market's going to fall, the sky's falling, whatever you want to be, right? Or you could actually deal with reality, okay? That's up to you. I can only tell you what's going on. You have two options here. Are we seeing signs of increased productivity, and is the market getting better? Yes. Are we seeing signs of recession? No. There are 6 major factors to look at for a recession. You're seeing 0 of them, literally 0. So the people that are waiting for this recession, and I'm not saying that it can't happen. Of course it can. Anything can. We had Target come out today and say some things, but I believe Target's doing that for their own good. We can get to that very quickly. This is what's happening. So it's actually good that yields are rising because it means that, once again, the Fed screwed up, shocker, and they cut into increased productivity, which is going to make the market lift, which is why the market is continually going higher. Friendly reminder, this is the 100-year chart of what happens during the election period, October 2nd to November 5th. And you can see where you're at right now, that 21st level. Historically, there's some kind of downward move here, and then we go higher. And we're also going into 37% of the S&P coming out with earnings this week, as well as the blackout period is ending. So just understand that this is kind of what they're telling us to expect. Whether it happens or not remains to be seen, but I think it's worth paying attention to. And with no economic data out there whatsoever at all, and on top of no economic data out there whatsoever, and just China cutting rates, what happened to the current chance of rates staying exactly where they are, which is 475 to 500, which is right here, went up to 13.2% from 9. 86% chance of a cut from 90. That's where you're at today. Nothing new. And what you're seeing is you're seeing them sell bonds and they are buying equity. And we can explain that by what we just went over. Right now you have a strong dollar. And what you're seeing is you're seeing positioning. What we're seeing is positioning for a change in administrations to some extent. I'm not going to get into it because even when I go over it in the pre-market video, people, when we start doing that live, people get goofy with opinions and I don't want to hear the political opinions. But you have a strong dollar here, guys. And as long as you have a strong dollar, you're going to continue to see the industrials do this and lift. And even when the Dow drops, okay, it's still probably going to just turn right back around and rally because that strong dollar is helping those industrial kinds of companies. We even saw it today with like POLW, where they do the undercut and then they do the flim flam to scare everybody, and then you're almost closing at an all-time high. So keep that in mind. Continue to watch the dollar. There's a lot in this video, and if you're interested in some of the patterns that I trade during the day, you might want to watch one of these 2 videos. That's it.